The new lease standard for non-public business entities is fast approaching. Is your company ready? Hi, I'm Priya Singleton, Quality Control Officer at Blue & Company. In this series of videos, I'll be covering the crucial things a lessee needs to know about the new lease standard. For now, I'm going to give you a high-level overview of changes to be aware of. The new standard is effective for fiscal years beginning after December 15, 2021. Meaning if you're a private company with a 12/31 year end, the standard will be effective for your calendar year 2022. The new lease standard applies to leases of property, plant, and equipment. Similar to previous guidance, certain types of assets are still excluded from the new standard, such as those related to intangibles, inventory, and certain natural resources. The most significant change is that lessees will now be required to record a lease liability and a corresponding right-of-use asset for virtually all leases on their balance sheet. The asset represents your right to use the underlying asset, while the liability represents the present value of the lease payments or your financial obligation over the lease term. Although the previous guidance required companies to identify all of their lease arrangements, the impact of operating leases was not as significant since they were off balance sheet and the expense recognition was similar regardless of whether the lease was treated as an operating lease or service agreement. Under the new standard, however, if the agreement is a lease or contains a lease, it needs to be recorded on the balance sheet, which makes lease identification very important. Once your leases are identified, you will need to classify leases as either operating or finance leases. A finance lease is the new term for what was previously called capital lease. The 4 criteria for distinguishing between finance and operating leases is similar to previous guidance, but with a notable difference. The guidance removes the 75% and 90% bright line tests. The new guidance adds a 5th criteria for classification that is focused on highly specialized asset with no alternative use to the lessor. So you know, the expense recognition will not significantly change from previous guidance. Your operating leases will result in a straight-line lease expense over the lease term, while finance lease expense would generally decrease over the term of the lease. For short-term leases that last 12 months or less and do not include a purchase option that is likely to be exercised, you can elect to not capitalize the lease and continue to treat them as operating leases under ASC 840. The last thing to note is that there are several key differences in the new guidance surrounding the definition of the lease recognition, as well as measurement. If you'd like to see how the standard may impact your financial statements at a high level, click on the link at the end of the video to download Blue & Company's ASC 842 Lessee Implementation Guide. When you're ready, click through the other videos in the series to start implementing the new lease standard for your non-public business entities.